There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the 1228 condensed and holiday version of the midweek software strategy session. My name is Steve Vetterl. I am the CMA. It's a big fat title. Doesn't really mean anything other than I am your risk manager. So, as we start off with our plan for the day, let me just make the screen a little bit bigger here. There we go. I am in the AP Social Live, which is actually a great platform. It's been quite stable since it's been up and running for almost 6 months now. If you go into my Market Watch, you can see I'm sort of a member of all the rooms here to keep an eye on what's going on. But if you click on Market Watch, you can see like the whole session. What I love about this is you can see the schedule of everything. Talked about this a little bit before, but I certainly think it needs further mentioning. At the very least, you want to look at your developers' calls. If you have 1 or 2 or 3 pieces of software or more, tune into all their calls. They are all recorded. And then obviously down at the bottom, so I wanted to point to both the midweek strategy as well as the Saturday trade forecast. Both of these go off if you want to join them live at 10 a.m. Pacific time, which, by the way, will be changing to 1 p.m., so essentially same time, but I will be changing to East Coast, so it'll still continue at the same time. It'll be 1 p.m., but all you have to do is just click on the arrow down here. You can drop down and see all of the different forecasts for the different times. I didn't do one Saturday because it was Christmas, and we're actually still on vacation here, but at least I can broadcast. Have a couple of screens in our place. So the news feed, as I always recommend, take a look. Brian gets the award for the year. He is our most active, but I try and post everything that's going on in addition to the actual trade room, the live room, or you could just go into the groups area and visit it that way. See like a whole summary of everything that is been posted. I try to use the tags of trading and risk management, so forth. Anyway, let's head into the Forex Factor Count, and I show this because it's kind of fun, right? We don't ever get to see this. So today is the 28th, right? But the week started off, it's obviously the week between Christmas and January. This is actually the first time all year, I'm pretty sure, that you'll see no news. There's nothing going on. There's essentially mostly holidays this entire week with the exception of Wednesday and Friday. Although Friday is New Year's Eve, so anywhere around the world, it's basically a good week to be off, a good week to do some partying or some skiing, or if you're at the beach or wherever you are, spend some time with the family, as I always recommend. Keep in mind, risk management is always important, even in partying. So, that being said, a couple of thoughts here, year end, and we'll jump into the charts real quick. For those just wondering, and I guess I can post this. Yeah, I guess I'll just post it in AP Live. I probably should have posted it in there. But feel free to follow me if you want. I mostly post follow-ups to mostly futures and equity-based chat, right? It wasn't last Saturday. We didn't have a call, but the Saturday before, which was, just double-check the dates so we're clear. So it wasn't this Saturday, the 25th, but on the 18th, if you get a chance, go through the recording. I actually did an entire how I structure equity portfolios chat so that you can get a feel for how I structure and actively manage portfolios for clients of First Down Financial. It divulge a little bit of secrets, still keeping the family recipe a secret, but again, it's get a chance to talk more about process. And this isn't really, everybody tries to make this like a big deal. I mean, the process really can be anything that you deem worthy of risk management and screening methods, right? But one of the things I've always talked about from the very beginning and for many, many years, even though I am not actively posting my own thoughts, because again, we want to keep that sort of family recipe a secret here at the firm, but there are a lot of really good people I follow on Twitter. And I seem just like a broken record on this, but if you follow the right people, they totally help you cut down on the research, right? I mean, there's things brought up, especially by a gentleman like Mark Minervi, who actually lives in Florida. I'm looking forward to meeting this guy. He has a real big following. It's a bunch of best-selling books, so forth. He talks a lot about risk management, obviously, but the interesting theme this week is the Santa Claus rally, at least in equities, which we'll jump into the charts and show you. But the Santa Claus rally has, essentially 25 names like he highlights here account for over 40% of the weighting, right? That right there is a risk management, because if there's underlying weakness in the other 475 names, it's being masked, right? He talks a lot about weighted index of masked below the, so the question is, does the rest of the market play catch up, or is the correction over? It's a great question, because I don't know the answer to that. But I think it's important to understand that there are a lot of really just generous, very wealthy individuals on Twitter. I follow David Hunter. David Hunter has been retired for many, many years, and he continues to have a huge following. He has nothing to sell. He really just puts his thoughts out there. He is one of the most accurate timers of the markets, mostly from just a big picture standpoint in the equity markets. But he does talk a lot about the dollar. So I think it's important to focus on who's doing what. I do think that, actually, let me go back to my feed. A couple of things from the last week I've put out. Favorite books, always a good thing. Keep in mind, a lot of these books aren't necessarily about trading currencies. It's more just general strategy. Mark's favorite book list is absolutely mine. This is a really good one here from Napoleon Hill. It was written many decades ago. It's called Think and Grow Rich. It's actually a great, great book. How to Win Friends and Influence People is another one of my favorite books. Written by Carnegie, talks a lot about how in the early days of the rail industry, where he made most of his money, he actually became best friends with a lot of his competitors in the rail industry, especially Pullman. And a lot of the things he lays out in his book is really just essentially rolling out the red carpet for your enemies, right? In terms of strategy. So there's some really cool stuff in some of these books. But, it's stupid like a year-end review type of things. But, you could just skew through this and see different charts and so forth, what's going on. But the charts as a whole, if we jump over to the other side, let's take a look at the S&P first. Just expand the screen out. This is the Santa Claus rally. Now, one thing to note about this is it looks great, right? Hey, we just had a break on the market. Look what's happened to the volume on this rally. It's dropped off, right? Can't really put a lot of street cred, if you will, into a sustainable rally that comes on much lower volume. We talked a lot about this during the holidays, but, we I guess are getting more clarity that this whole Omicron crap is not turning out to be all that much of an issue. Although if you lived in New York City, you'd probably think differently with all the crazy politicians overreacting to this stuff. But it's a power grab, so don't pay attention to it. But just note that if it was really a bad situation going on as far as virus-wise globally, this market wouldn't be rallying. Plain and simple. If you take a look at the NASDAQ, let's just look at the broad market as a whole, it has not made new highs. So that lack of participation that is being really sounded from the cliff in terms of just the smallest of moves by the majority of companies, whereas the top, hell, I'd even say the top 5% has accounted for huge chunks of the moves. And many of them have been following and listening to me talk about this for last year. You know, it's companies like Tesla and so forth that have really rallied in this area. So just jumping over into global equity markets, FTSE 100, almost new highs, pulled back. Of note, by the way, DAX nowhere near new highs, still stuck in the mire, if you will, of a long balance area, which has been running since June. So if we look to a little bit larger, we are nearing the highs with the 600 index on the stocks. Emerging markets still trending down. You can almost look at the weekly charts on these, but I want you guys to see sort of the daily moves. If we go to the dollar, it's very, very tight range after a rip into this area. I've talked significantly about the last 6 months, was anticipating a break. Told you anything you're trading manually that is in a pair with the dollar, once this broke out, I would have been essentially long of the dollar in the form of that trade. In many cases, it would have been short, right? So opposite side of that, Euro US dollar, same tight consolidation. No surprise, holiday year ends, lower volumes, a lot of people on vacation, all that. You can just see in the decline in the volume here. Not a surprise, but just understand we're still in a tight range. Same thing with the pound, albeit I think this is a bit of a surprise right here. I think some of that's probably come from the fact that everything else has really been weak with the exception of the dollar. And this is one of the lone areas of strength, at least very recently. US CAD, same thing. Dollar pushing up, price of Canadian dollar going down, but a tight consolidation up here at the top. Again, just letting you look at daily charts on this stuff. Really don't have a lot of comments on this. Dollar Swiss, Aussie US dollar, very similar to some of the other charts as shown. Take a look at Euro GBP. Of note that this is, in terms of Euro's weakness, obviously strength in pound. It's a good chance this could break lower, although many do not trade that. So we get down the list. GBP CAD, so let's spend a little bit of time here. This is the NEO currency. I want you guys to see the daily chart on this. Just expand her out a little bit. So we had a pretty significant area of resistance, but again, British pound has been strong, Canadian dollar has been weak. That certainly is seen since this whole complete rip back into this area. Just understand from everything, a mineral standpoint, a commodities, a mining. I mean, there's really really a lot, really tough laws on COVID. There's a lot that Canada has to lose as a country, GDP wise, on their what I consider to be excessive crackdowns. So that's affecting obviously their currency. We see that here. My hope is that, as I don't pay that much attention to it, too much going on here, but once the break above this area, I really hope that NEO was taking mostly long trades on pullbacks. Is really the game to have been in here. GBP NZD of note, again, it's been a while. It's been August, almost a whole quarter. We just broke above this area. So this absolutely could zip to the top if the pound continues up. Notice we could completely rip into this area. I just personally would not want to be shorting against the pound right now in this particular pair and some of the others I've talked about. Spot gold, surprising we're not seeing more with all this global baloney and fear. Oil, we've come back. Price spikes. You know, if we were really selling off and the world's falling apart on this new variant, would oil be going down? Just the question you always want to be asking yourself, because the markets are typically 6 months ahead of the rest of us. So if you've ever heard the term markets price and all known information, Now, whether or not they do it accurately certainly remains to be seen. That is open for argument. But at the same time, typically the statement is that, think about something that the market is not thinking about, right? There's a risk management line for you, if you will, because the markets are always typically efficient, at least in the equity and future space, very efficient at pricing in known information. So what they haven't priced in, and in many cases has been a disconnect, right? Arbitrage, if you will. Maybe that's a stretch, but the factors that the market hasn't priced in, right? That's what I always think about in terms of forecasting forward. Forecasting is a futile endeavor. I think I've been lucky more than right this year just by reading the tea leaves, and I certainly could be more wrong next year. But just understanding the headwinds that may be coming from any given area, whether it's meltdowns of real estate, China, global effects of pandemic or variants thereof to different economies, the politics of many countries in terms of locks and crackdowns, that affecting essentially the global trade or sales of any particular product. That really at its very core, if you're looking down upon the globe, those are the things that are most important. Getting caught in a lot of the minutia is not. All it does is cloud your brain up. Just focusing on, which countries are doing great jobs at managing this pandemic, which aren't, right? There's arguments that there's both columns full of all kinds of different countries, right? I don't hold an opinion of that. I just read what the market is seeing, and that. Look at some coinage. Bitcoin daily. I still think we need to crack below this area. We've had a quick sell off. I don't know how much you can really read into any of these moves because the vast majority are coming on low volume, right? So low volume, it can be a manipulated market. There can be risk there. I typically do not trade around a lot of holidays, especially the last 2 weeks of the year, as I posted in AP Live for that very reason. But I still think this really wants to crack below this 44. Oftentimes on daily charts, if there's a big volume on some rip, and we know some individuals, entities, what have you, stepped in to defend this area in the coinage, and more than likely we go back and test these lows. Why? Just because it looks like an incomplete auction down here to me. So just know that if you were long a lot of coinage, and please don't tell me you're long a lot of it percentage-wise relative to your other assets, because then I'll just hound you to reduce risk. What else? I think that's pretty much it. I'm not going to get into any individual equities. Just wanted to stick to the bigger picture in terms of currencies. Actually, take a look at the VIX. I don't think this is going to matter much, but but we start getting back up to around where we were at the bottom of the correction. This was the sort of emergence of the variant and its potential catastrophic impact, which was all a bunch of baloney. We were up there around this volatility. There's a good chance we could see some of this around the beginning of the year. And if in fact we do, again, good time to trade, just make sure volumes are back. And a lot of people always ask me, well, why is this big old event with volumes and so forth? I said, well, because volume tells the story. If everybody's participating in the annual kids cookie drive, right, you get a better feel for how many good cookies or bad cookies are on the whole mix. If there's only 2 people participating in the bake drive, right, or the bake sale, you don't know if the rest of the residents and what their thoughts are on how they can cook or not. I mean, it's probably kind of a crappy analogy, but I use lots of F1 analogies. I figured I'd bring a baking analogy in for the holidays, but it's true. I mean, the more participants there are on any given market, I don't care if it's a bake sale or if it's trading in the oil markets or whatever. The more volume, the more participants are in, the more data we get, the more actual executions that we can aggregate and put on a market profile chart. And with that, I wish everybody a happy new year. Hope everything has been well for everybody. I know that certainly 2020 has been a challenging time, and we hope that 2022 brings a lot less challenges and a heck of a lot more prosperity. Happy New Year.